But KeyBank is out with a very positive note today, double upgrading its outlook on that space to overweight. Kevin O'Leary, is now the time to upgrade home builder stocks to overweight with a 20% upside? Really?
It's a counter call, and I like calls like this because it takes a lot of guts knowing the Fed is still against you in headwinds because mortgage rates are definitely going up. Just look at the 2-year, look at the 10-year. But bottom line is, in this country, we do not have enough housing. That's a problem. And so even if interest rates get mortgages up past 6%, there's still going to be demand for housing because historically that's not really been a very high rate over a 30-year period for mortgages. So end of story. It's gutsy, I got to admit. And there's one other thing to look at. If you look at Home Depot, which I consider such a great index for housing, and that's a stalwart. It's been in indexes like the Alps OUSA forever. Mm-hmm. It's been beaten up, but it's got a 16% increase in dividends. It's got an ROA of over a double digit, and it pays a really good div yield. It's in the same boat. If you're going to buy housing, you might as well put an allocation into Home Depot.
I mean, not really. If you might choose to fix up your house rather than buy a house if mortgage rates continue to go up, Kev. I mean, I can understand the Home Depot play. But it's not in the same boat.
The sentiment against housing really goes to Depot. Depot's getting beaten up, and I think it's a fantastic company because it's got great metrics. We talked about the importance of dividend yields. We talked about that's a really good way to look at a company's ability to stay on course with their business model. Depot's management has been weathering the storm, and every time you get a downgrade on housing, the stock gets beaten up. And I agree with you. It really doesn't have a lot to do with new houses. But if you are going to make new houses more expensive, you're going to spend a lot more time fixing up housing. So I'd say if you're going to go and buy an index of home builders, add a little sauce, just a little sprinkle of Home Depot in there, too. You're in the same sector.
Yeah. Well, Shannon, you own it. So I guess you agree with Kevin O'Leary. The question is, do you like it more than, as you would say, adjacent stocks like the builders?
Yeah, we definitely prefer housing adjacent stocks, Scott. I think in this period, we're anchored to a very low mortgage rate for many buyers. New buyers are not seeing that inventory. One thing that could really change for home builders, though, and an area that we obviously haven't been in, but if you start to think about the rent increases that we're seeing as part of the CPI print, and buyers start to accept that mortgage rates aren't going to go back down under 4, at some point you hit that inflection point where supply has picked up incrementally. We're seeing it already in terms of month of supply, and rents are increasing at a rate that start to push, potential buyers into that territory. So I think the housing market is not dead, but I do think there's going to be a delay in some of this demand, and I think this call on the home buyers is a little early.
What do you think?
I want to get, I'm listening to this segment, and I'm thinking going second derivative on housing. By the way, the concern that I have would be credit availability more than anything else. Louisiana Pacific, that is a great second derivative trade off of this. It's a name that I've owned in the past. Trades at 3 times right now. Gives a dividend yield. Company is right near its June lows. I think that's the second derivative play if housing's going to recover.
The other call I want to get to real quick, Shan, is this Adobe call, right? You own it, downgraded. You don't like the deal that they just did, do you? Because you think they overpaid, and Kevin O'Leary sort of alluded to that a little bit earlier.
Yeah, so if you look at the decline, I mean, we're talking about 5% dilution in EPS over the next 2 years. The decline was probably overstated, if you will, if you just look at them growing earnings by 10 to 15% over the next couple of years and the multiple it's trading at. My concern is that I think this is a messaging from Adobe's management that perhaps the innovation within their own company and in their own business lines is stalling out. And I think that's more of a concern for me on a longer term basis. Still like the stock, but why we're not adding to it after such a decline is that I think there's a little bit more fodder for competitive concern than we thought there was prior to this announcement.
All right, we'll take a quick break. We come back. Mike Santoli joins us with his midday word. Plus, we are just over a week away now from CNBC's Delivering Alpha event, September 28th. To register, scan the QR code you see right there. Halftime's back right after this.